The third chapter of this series is to understand what kind of investors you are. This will help you to create your own mix of investment portfolio. Now, when making your own investment decisions, you need to consider these three factors in order to know what kind of investors you are. First, your risk tolerance. Basically, you need to know the amount of risk that you can tolerate in order to obtain the returns that you want. Second, your time horizon. Now, the amount of time that your money will remain invested is very important. I think in the earlier version, we say that you should at least put your money in the investment for at least 5 years. Thirdly, your investment goal. The amount of money of investment to invest in order to achieve your financial goals and your returns. By answering these three questions, you will know what kind of investors you are. Now, generally, there are 4 kinds of investors. Now, the first one are the risk averse. This kind of investors usually prefer to invest into high interest savings account. Now, the second, conservative investors. This type of investors will have majority of their holding consists of bond market and some in the stock market. As for the moderate investors, which is the third kind of investors, their portfolio usually consists the right mix of low risk and high risk asset, which means that there's usually an even split between the bond market and the stock market within this portfolio. Last but not least, the growth investors. Now, for growth investors, their portfolio usually focus on the stock market with a bit of the bond market within it. The reason being is to basically mitigate the downside risks of the stock market. Now, knowing this, regardless of what kind of investors you are, it is important to diversify your investment in order to smoothen out your investment returns over time, which is why it is very important for you to find the right mix of portfolio that suits your personality.